And time now to check on the business sector, particularly with a view to scrutinizing government's ease of doing business policy, and with reports that Nigeria has moved on and is currently 131 position in the World Bank's ease of doing business ranking. So what's the reality on ground as against this seemingly positive report? And joining us to have this conversation is Mr. Cyprian Orapo. He's the MD O-Care Disposable Syringes Factory, and he joins us right here in our Lagos studio. Good morning, and thank you so much for joining us, sir.
Yeah, thank you, madam.
So first of all, I often say that we talk a lot about the ease of doing business, and some states of the federation, in fact, win, the federal government's award of ease of doing business. But really, let's look at what's on ground. So what's the difference between an enabling business environment and government's ease of doing business policy? And why is there a disconnect between what's on ground and the ease of doing business policy? And when I say what's on ground now, I mean infrastructure that should really, be provided to encourage investments to thrive.
Yeah, I must say that it's not just a policy issue, okay? It's much more than that. There are lots of, there should be synergy between the implementation, between the framing of the policy and the implementation of the policy. Sometimes, or many times, government may mean well in formulating policies to enhance the ease of doing business in Nigeria. I'll give you just one example. Sometime last year, His Excellency, the Commander-in-Chief, brought out some executive orders. I'm talking about Asiwaju Bola Ahmed Tinubu. Released some wonderful executive orders for food industry and for health industry to reduce the tariff, okay, on health products. Okay, that's the industry where I play in manufacturing disposable syringes. This executive order came out in June 27th, 2024. It took 4 months for the Gazette to be produced. The Gazette was produced in November last year. But as I'm talking to you today, the implementation guideline for this executive order is not yet out. So there needs to be a synergy between formulating policies and also implementing policies. And this policy is an excellent policy. I learned that many people who deal on food, they imported wheat and all kinds of food items, food products, because of the order, in anticipation of the implementation. The vessel carrying the imports arrived, but the implementation guideline is not out. So they had to pay the former tariff after spending so much in paying demurrage at the port. So who does that? Okay, so the issue is much more than having good policies. Okay, there must be a synergy between the government ministries. In the area of pharmaceutical products, okay, basically you have the Ministry of Health, Ministry of Trade, Industry and Investment. You have the Ministry of Finance, okay, you have the Customs. Now, these 4 ministries, they're supposed to come together and come out with the implementation guideline. 8 months down the line, it's not yet out.
And, it's quite concerning to hear that some will call it audio executive order? Because so far they've not seen the reality. All they heard was the executive order, but it's not come to fruition. And that raises, more questions really than answers. But I want us to speak about the work you're doing as well, because I think there will be a lot of value in understanding where you operate and how you also operate in that context. I know that you have a trajectory. Right now that you're doing disposable syringes, you didn't start from there. You were doing CDs at some point. So I want you to walk us through your journey first as a manufacturer. Then we'll begin to pick some of those points as well that we think government needs to work on to ensure that manufacturers have that ease in the journey, in that sense.
Yeah, okay. Actually, we started off as traders, importing tapes and videotapes. That was as far back as 1993. When the technology was disrupted from the analog media to digital media, CD and DVDs, that was in 1999. So we were able to transit or to migrate to manufacturing in 2003. Then that was the glory days of Nollywood, if you remember. Okay, so we're able to, with the assistance of banks, actually, it's an interesting story, which I love sharing. Okay, as a young person, I read economics and statistics, so I did my feasibility studies to move from trading to manufacturing. The environment was conducive. There was huge market. It was an emerging market, huge opportunities. Okay, it's easier for CDs and DVDs to be manufactured locally than importing them. Okay, so we went to banks. So we knocked from one bank to another bank seeking for the finances to start the manufacturing process. Not one single bank listened to us. We got tired. We got frustrated. And then on one day, I don't want to mention the bank, a bank that just acquired some young people that acquired a particular bank. One of them walked into my office and said that they are interested in me, that they went into the industry and that they asked about 5 people who are the players in the industry that they would like to work with. And out of the 5 people, 3 of the people pointed my company, that if they want a company that they can work with, that they should come to me. So I was excited. So I pulled out the feasibility study that I had done about 4 years ago, and I gave to them. And in less than 6 months, they approved the importation of the machineries, and then my stake there was to build the factory as the collateral. And that was how we moved into CD manufacturing. And we grew. We grew organically and became quite big. As at 2015, we became one of the biggest manufacturers of CD and DVD in the whole of Africa. Okay, but of course, the technology was disrupted. Okay, and we tried to move into other areas. We have actually tried, beside the success story of disposable syringes, we have tried other industries, like the floor tiles. We wanted to manufacture floor tiles. Okay, we did all the studies, we went overseas, we employed consultants, everything was good. But then the capital, we couldn't raise the capital. The minimum capital needed was about $50 million, and we don't have that.
So your story is very inspiring and interesting all at the same time. And as Kayode has said, we had to follow your story, and clearly we could see the gaps from the policymakers, the system itself, and what can be improved upon. But let's allow you do that, check on the gaps that you've noticed between what happened when you started and what is happening now, which is limiting the level of manufacturing we need in our country. Because we always start and say Nigeria is highly import dependent. Some people debate on it when they compare export ratio as against GDP and all of the economists talk about. By the end of the day, we import a lot of things that we should be manufacturing. So what is the major, you've highlighted this policy from an executive order that has not been implemented. Great idea, but implementation is a failure. So what can government do to expedite, accelerate manufacturing? Because the economy is really biting hard. And if we produce here, backward integration is going to be great.
Yeah, access to finance, very important. Like I said, if I had $50 million, I would be probably one of the manufacturers of floor tiles. Locally, we have over 80% of the basic raw materials.
Really?
Yeah, in manufacturing floor tiles. But the capital is huge. So you discover that probably 90% or 95% of the industry operators in that industry are foreigners, because they could easily raise cheap funds overseas. Okay, now government through Bank of Industry actually provided lots of funds, okay, that local manufacturers could access. But then the Bank of Industry needs bank guarantee. That bank guarantee requires that a commercial bank will provide a guarantee, and that's where the problem is. Because the commercial banks, they will ask you for 120 and sometimes 140% asset coverage of what they are guaranteeing.
What does that mean for those who don't understand?
For example,
yes,
if what you are looking for is 100 million naira, an average commercial bank in Nigeria would want you to provide 120 million or 140 million in assets as a collateral.
To guarantee.
Is this the same for the promised intervention by the administration at the start in 2023, when nano businesses could access the capital and manufacturers could also access capital at the rate of 9%? Do you also require this bank guarantee?
Of course, that's the problem. The fund is there with BOI, but BOI, I mean, by their policy, they prefer commercial banks to provide guarantee for them. And again, also, in fact, many traditional banks, I mean, the old banks in Nigeria, they have an unwritten policy not to provide BG for BOI.
So do you engage with the Minister of Trade and Industry, Minister of Finance, at the association level, such that you can present these challenges to them and appeal for a soft landing?
By the grace of God, I am the vice chairman of Manufacturers Association of Nigeria, APAPA. At different forums, we have presented this constraint. With capital, with finance, we have smart Nigerians. We have innovative Nigerians and companies, okay, that can turn around this country. Okay, but the financing is not there. And where it is available, providing the need. Come on, let me talk about my experience. It's a practical experience.
In like a minute?
Yeah.
In 60 seconds?
Yeah, on these disposable syringes that we started, is quite heavy on capital, okay? We needed a working capital. We financed the assets and the machineries from our savings. We had to sell properties. In fact, I sold virtually everything I had, okay, to finance the machineries. Now, when it came to working capital, we approached BOI. Of course, they asked us to bring BG. We went to many banks for BG. They wouldn't, except Premium Trust Bank. I say it publicly. That was why we could be where we are today.
All right. We hope that when next we have this conversation, we would have moved from good intentions to practical implementation of these very ambitious policy of government.
Yeah, we can export, actually. Okay? It's another story altogether. Because you see, for us to export, we need what they call, WHO called pre-qualification. Now, this pre-qualification, I've asked around, it will cost average of $3 million for WHO to pre-qualify your locally manufactured product in Nigeria.
All right. Thank you for bringing these issues to light. We've been talking with Mr. Cyprian Orapu. He's the Managing Director, O-Care Disposable Syringes Factory. Thank you so much for your time.
Thank you. All right, thank you.
From here, we move on to another equally interesting and inspiring conversation with a young Nigerian that you will be interested in seeing again. I'm sure you've met her sometime in the past before, but she's doing greater things now. So stay with us. We'll be right back.